Good morning, ladies and gentlemen. Welcome to the Q2 FY23 results conference call of Shri, Keshav Cement and Infra Limited, hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Supriya Madhye from Kiran Advisors Private Limited. Thank you, and over to you, ma'am.
Thank you. Good morning, everyone. On behalf of Kiran Advisors Private Limited, I welcome you to Shri Keshav Cement and Infra Limited, the Q2 conference call. I welcome management and all of you. We have today with us Mr. Venkatesh Katwa, the Chairman of the company, Mr. Vilas Katwa, Managing Director, Mr. Deepak Katwa, Executive Director and CFO. Now I hand over the call to Mr. Venkatesh Katwa for the opening remarks. Over to you, sir.
A very good morning to everyone. I extend my warm wishes for this festive season. A very post-happy Diwali to everyone. I welcome you all to our third conference call of Shri Keshav Cement and Infra Limited for Q2 FY23 result discussion. Now to begin, I would like to brief about the company. Keshav Cement and Infra Limited is a public limited company which was incorporated in 1993. We began with the 20 tons per day plant in 1994, and as of date, we have a capacity of 1100 tons per day and a 37 megawatt peak of captive solar generation. So we crossed the milestone of 100 crores in FY22. SKCI is looking forward to the continuance of the growth story with strategies at place and promising sector outlook. I will begin with speaking on the industry outlook. Cement is an important sector of the economy, and India is the largest, or rather second largest producer of cement in the world. However, the penetration is very low. Even compared to many other countries of the SAARC, we are probably on the bottom 2 list on per capita consumption. Our per capita consumption is around 200 to 250 kgs as compared to the world average of over 550 kgs. Leaving a huge scope for us to increase on the back of the rising demand for the real estate and a lot of pending infrastructure development in the country. Demand growth is largely supported by the government spending and improved outlook from the real estate industry. Industrial and commercial sectors are also expected to rise by 5 to 6% during FY22-27 on a CAGR basis, while urban and rural housing is also expected to contribute around 8% during the same period. Infrastructure continues to remain a major demand driver with expected rise of around 8 to 9% for the years 22 to 27. This is possible due to the strong support from the various infra development schemes of the government, like the Bharatmala project, Housing for All, Metro, Airport development, and a lot of irrigation projects. This time, the delayed monsoon has been causing a concern over consumption and construction activity. We also need to see how delayed exit of monsoon impacts the crops. Another very important factor as far as the cement industry is concerned, the prices of fuel, that is coal and petcoke, are very fluctuating. There was a sudden silver lining when we saw petcoke price dropping down to around $170 to $180. But that wasn't for long, and again it started continuing going up. The petcoke prices are again back to around $200 to $210 per metric ton range. Coal on per kilo calorific basis is higher compared to petcoke prices. Mainly because of the geopolitical situations like war and issues going on in the world. Outlook regarding fuel is always going to be a little fluctuating, and this is affecting all the industries. Although the fuel costs are very high for the whole industry, the positive side is that the demand outlook is extremely positive. We have strategies in place to reap the benefits from the strong demand, improving our profitability. And with the installation and working of our solar plants of 37 megawatt peak capacity, this company is saving huge energy costs as company is currently utilizing its own power generation from solar plant for production of cement, and it is expected to save more in the future. There is a little addition what I could make here is because of the increasing coal cost, all the state governments and all the discoms are charging fuel escalation cost onto the consumer. It's roughly coming to almost 1 rupee per kilowatt hour, which of course even that part we save. So some of the savings are not direct, some indirect savings are happening because of increase in the coal prices too. The cement demand is normally stronger after the festive period, that is for second half. Typically, cement is a very cyclical industry with the first quarter and last quarter being the best. So first quarter and third quarter being moderate and the last quarter being the best. Now to look at the cement outlook, like discussed in the last Concall, the company has completed a technical feasibility study to optimize the cement operations and increase the cement capacity to 1 million ton per annum by just adding the balanced equipment. Typically, we are able to execute this project in around between $25 to $30 per metric ton as compared to industry standard of around $150. This is again mainly because of the fact that we don't have to purchase new land. There is no additional, grinding equipment or raw material grinding equipment required. A lot of balanced equipment is already in place. We just have to modify the kiln section, which is what is going to bring us savings. The focus is to reduce overall power and fuel consumption cost, and also incorporate alternative low-cost fuel usage. So with this modification, we would expect you to use the municipal waste and rice husk and other kind of fuel to certain percentage. And on the completion of this modernization, the company expects to improve the EBITDA per metric ton of the cement. Our current last year's EBITDA per ton was approximately 300 rupees or less than 300. With this modernization, we expect it to increase at least by over 1,000 rupees or so, which is pretty much what is the industry standard. And we are also promoting pozzolana slag cement that will effectively reduce the carbon load and per metric ton of cement. These strategies overall will bring, threefold increase in the top line, but hardly 30 to 40% increase in the costing, because there is going to be certain economy of scale that is going to play. So let's go to the performance of company during H1 FY23 and for the quarter. The demand for cement this time was pretty moderate because of the monsoons and other factors. Company could not, the capacity utilization was almost similar to what it was in the previous quarter. But what we did was, of course, we performed better because this time we could add more additives and sell more of slag cement, which did save us on the cost, which can be seen on the financials. And solar power, due to the installation of 12 megawatt, was also a main growth driver. Revenue contribution increased to around 18% on overall revenues of H1 FY23 compared to just 7% in H1 FY22. So just looking plainly at half year FY23 results, revenues of Q2 is 58 crores compared to around 50 crores in the previous half year of FY22. Revenues from solar generation increased to 10.44 crores compared to 3.54 crores, with a jump of almost more than 300%. And this is in line with our strategic thinking that with the installation of a new 12 megawatt peak solar plant, the revenues are showing up on this particular half year results, and this will continue to do so now. EBITDA also increased by over 9% compared to earlier, again because of pruning the cost. There is a constant follow-up on cutting down on the cost and operation efficiency. PAT was, of course, increased. PAT is at 27.61 crore. It increased a stupendous 460%. There is a very huge positive cash flow also from the operations. For Q2 FY23, revenue is compared to the previous quarter of the preceding year, revenue jumped by around 4.84% to 24.84 crores. EBITDA for Q2 FY23 is 8.96 crores, up by nearly 24%. EBITDA margins were higher by over 540 basis points to 36.07%. There is a savings in finance costs of around 15% again on the continuous repayment, company management correct repayment schedule. Also certain, there is going to be further act on pruning the interest cost which the company is in discussion with the bank. The profit after tax is arrived after again deferred tax liability of around 84 crores, which remained at 1.16 crores. So these are the facts about what we look at, and these are the figures. With this, I would like to open the floor for question and answer, and I thank you all those attendees who are attending this call. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and 1. The first question is on the line of Raman Bharadwaj, an individual investor. Please go ahead.
Yeah, thanks for that. So my question is regarding the expansion of the capacities. You've already done the financial analysis. So first thing is, have you decided when the project activity will be taken up? Because I believe that will take approximately 3 weeks or 3 months, 3 quarters for completion as per the last Concall. So any date on the commencement of the construction?
So typically, as of now, we have decided to start the construction work somewhere in the mid of Q4 of this year. So January or February is what is expected. And the project timeline from the first bid to first bag is expected to be around 14 months, 14 to 15 months, I would say. So by FY24, we should have completed the project. FY25, we should have had the entire capacity in hand to begin with.
All right. Thank you.
Thank you. We'll move on to the next question. That is on the line of Amay Desai, an individual investor. Please go ahead.
Thank you for that. So my question is, we have seen savings in interest cost. There are any prepayments of loans that are done during the quarter, and what are the strategies that are going forward? And basically, what is the outlook for quarter 2?
So the first question you asked is interest is going down, so whether it's going to continue. That's what I hear.
Yeah.
So yes, company, if you look at in the entire past history, we have been very, very punctual and disciplined as far as repayment to the banks have been concerned. And with the kind of revenues and cash flow what we are generating, we are going to be expecting a better rating, which will eventually cut down our interest cost further, which of course banks have already assured us on cutting down on the interest. So with the repayment and cutting down on the interest cost of funds, you can pretty much expect the finance cost will continue to keep going down, which is of course playing one of the major costs in arriving at PAT. And outlook, like we discussed, what what we are expecting in this expansion is cutting down the fuel and power cost on per metric ton basis, which will increase the EBITDA margins. Once we have a EBITDA margins in our favor, then we have bigger markets like Pune and Bangalore at our doorsteps to serve. So these strategies are expected to give us additional cash flow, which will help us to increase our reach to bigger towns and, of course, reach our capacity utilization of around 90%. So did I answer the question, or I thought there was another question in between?
No, sir, that's it. Thank you.
Thank you, Amit.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Harshit Toshniwal, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yes, you're audible, Harshit.
So, sir, few clarification. So, right now we have the capacity as around 0.36 million ton, if I am not wrong. And you are saying that by FY26. Hello.
Hello. Sorry to interrupt, Mr. Toshniwal. Your voice is sounding very muffled. We are not able to hear you clearly. So, can you use the handset mode while speaking and not the speakerphone?
Yes. Is it better now?
Yeah, much better. Thank you.
Yes. So I was asking that our total capacity right now is 0.36 million ton, and you are saying that by FY24 that capacity can expand to around 1 million ton because of that incremental grinding unit.
Correct.
Okay. And wanted to understand, sir, that for H1, what is the volumes which we have done, volume of cement production for H1 and Q2?
I can H1 Q2. Hold on. I have it right in front of me. So for Q2, we have done around 46,000 tons. And
46,000 tons?
Yeah. And for H1 is around 106,000 tons.
How much? Sorry,
6,000 tons. 106,000 approximately. I mean, the accurate figure would be 105,850 tons.
Hello.
Yes, I can hear you now.
Hello. Am I audible?
Yes, sir, you're audible. Please go ahead.
Go ahead.
Yeah. So, sir, on a YOY basis, our H1 106,000 ton, that has not grown on a YOY basis.
Correct. If you look at, I would say not significantly grown compared to the previous H1 figures.
Yeah, and this is despite we having that capacity. We are right now running at roughly 60-65% utilization.
Correct.
Okay. So that was one thing.
If we are not able to sell the entire capacity now, why is that we are going for an expansion?
Yes. If you can help that, what are the levers to increasing this?
Correct.
So because if we have 1 million ton and you plan to do a 60-70% utilization, assuming, then we'll have to scale our sales 3x from what we are doing now.
Definitely, Harshit. So typically, what is being a prohibitive factor for us right now is being still a very small capacity. Our reach is not happening beyond a certain geographical area because in the limitations of our margins on the cement. Logistic costs do a very heavy cost on the cement because cement is a product with a very high, very low value-to-weight ratio, which means that you need to have a sufficient EBITDA margins to push it further on geographical location, which we are, it has been restrictive because the technology what we are using right now is a very old technology, which is what we are planning to correct. In fact, in this particular quarter, out of EBITDA of around 8.96 crores, almost 8 crores is contributed by solar itself. So cement, I would say, unless we fix the operational efficiency issues, even the capacity utilization also will remain a little restricted. So once we have a bigger markets in our grasp at our door, because once your EBITDA margin grow, you can spend more on logistics, you can spend more on marketing. Then, of course, producing cement is not a challenge. The challenge is to make sure that we get the right price and it gets distributed in the market.
Okay, got it. Sir, if you can repeat that in our H1 sales of roughly around 56, 57 crores, how much was cement and how much was solar power distribution?
So you're talking about H1, right?
Yes, H1 sales. And also I would request if you can give those numbers in the presentation, because the volume, the breakup between the two, at least on the top line on the EBITDA part.
Actually, no, I can give a quick rundown on this thing. For the H1, one second, I'm just kind of looking at the figures here. For H1, the cement contributed to around 40, it is around, hold on, I can give it to you. For H1, the cement contributed to around 42.8 crores and cement contributed solar contributed to 10.45 crores, the rest coming from others.
Okay. And it's same thing on EBITDA? Yeah.
Solar has jumped from around 3.4 crores to 10.45 crores, almost a 309% jump. Mainly because, of course, we set up a new 12 megawatt peak power generation, which was commissioned the fag end of last financial year.
Okay. And sir, if I try to compare the EBITDA for H1 from cement and from solar?
Yes, I can tell you that. So EBITDA basically for, I can give you a rundown on that. For half year results, solar EBITDA is around 7.5 crores and around 1.55 crores is cement EBITDA. Cement EBITDA per metric ton is around 340 rupees per metric ton for the half year. But only if you look at, but that is still less compared to a lot of industry standards, which is around 1,500 rupees.
Understood.
That is what we are driving to achieve this time.
Understood, sir. And similarly, if you can give this number, so for cement itself, for 42.8 million ton of revenue and 1.5 million ton of 1.5 crore of EBITDA, if you can just break between Q1 and Q2, because obviously Q2, there is a higher inventory cost, so I just wanted to segregate that part.
Okay, come again. Do you say?
Yeah, I'm saying this 42.8 crore of revenue and 1.5 crore of EBITDA in H1. If you can break that into Q1 and Q2.
Yes, I can do that. So, okay, I can see the figures what I gave you is for HY1. But if you go by, I'll put it this way. Now, for Q1 and Q2, cement EBITDA is 92 lakhs and around 1.5 crores. This is Q1 and Q2 separately.
No, 92 lakh and 1.5 crore was for H1, you said?
No, it's for Q2. I think I made a little, it's for Q2 actually.
1.5 is for Q2. Okay.
I'll tell you. You can note down if you want. So
yeah, I'm noting down.
Cement EBITDA cement EBITDA is 92.44 lakhs in Q1.
Okay.
And 150.27 lakhs in Q2.
Okay, so basically H1 cement EBITDA is 2.42.
2.42, correct. And
okay,
solar,
so to that, sorry.
Solar is 144 lakhs.08 in Q1 and 745.87 in Q2. Together around 15.89 crores.
Sorry, sir. If you can repeat it for solar, just one.
For Q1, it is 844 lakhs.08.
844 lakhs, so 8.4 crores.
Yeah, 8.44, and this is 7.46 crores for Q2.
Sir, but then if I add, then it comes to around 15 crore for H1?
Yes.
15, 16, 17. So our H1 EBITDA should be 17. Achha, got it, sir. Understood. And if I look at the EBITDA per ton, so your EBITDA per ton has actually improved in Q2. So Q2 you have made 150 crore of profit and on 46,000 tons, whereas in Q1 you made 92 lakh for the balance, say around 50,000 tons. So what are the levers for increase in our because I think our cost of coal would have increased from Q1 to Q2. So what were the levers for increase in EBITDA per ton?
Okay, very good question. Two main reasons, Harshad. One is we have increased the additive component and we have sold more of Portland slag cement. Slag is available at around 1500 to when it is ground with clinker, it of course produces cement. The more I'm able to use the slag, the lesser my production cost of cement is going to be. Because cement, to produce cement, I need clinker and slag. Clinker is an expensive material which has to be produced from limestone, use of fuel and everything. But this time the savings what you see is mainly because what happens when you produce the clinker, there is a slight variation in the quality of clinker coming out of the kiln. Major plants do have that in control because of the legacy systems which we are going to implement in this modernization. But till then, what happens is in our kind of system, we segregate a very good quality clinker while it is coming out and utilize that clinker when we have to add more additives. This cannot be a generalized thing going forward till we complete the modernization. So once we complete the modernization, we will be able to add higher additives and taking this to advantage. So this for this particular quarter, yes, it was not much because of the fuel. It is more was because we could add higher additives.
And this should continue even for H2, or you think that there are limits? I mean, I'll just give you the number. So in Q1 we did 184 rupees per ton EBITDA. In Q2 that increased to 326 rupees per ton. And this is largely because you sold more PPC in Q2. And can this happen in even H2 also, or Q2 was a one-off?
Yes. Very likely. See, one thing is there. In H1 we used coal. In H2 we are going to be completely shifting to petcoke. So those things are going to start playing a role now in this thing. And of course, yes, we unless nothing changes, assuming the fuel price remains around the same and assuming everything else, you can expect the Q2 EBITDA per metric ton to continue in H2.
Right. Got it. And one more thing, sir. So when I look at the number for solar, we are right now operating at somewhere around. So you said that your EBITDA is around 7 crore, 8 crore. So that is the range of EBITDA at which we are operating for solar. And now when we look at the solar, so this is a steady state number of using full of hours. So this is something which should be very consistent going forward, 7-8 crore from solar plant.
Yes, this is what I would think. Yes.
Got it. So I'm just trying to
see what happened is the EBITDA. Yes, this is going to be consistent with this now. There's not going to be any change over here because we have solar plant 1, 2 together 37 megawatt peak power is producing at the highest level. So EBITDA for solar will not significantly change. Plus or minus 5%, it will remain the same.
Got it. So at least at this scale, and we are not adding any new solar plant right now. So 28-30 crore EBITDA annually we get from solar plant. And from the cement plant, right now we'll be making more around 5 to 6 crore of EBITDA per year. But going forward, once our capacity increases, and then, for example, even on the volumes, we can double it. And on the EBITDA per ton from 360 levels, we can move to around 1,000. So that is where you see the delta. Double from the volume. Yeah.
It's a cost arbitrage. That is what we are doing modernization for. In fact, we are calling it a capacity expansion only because with this modernization, another outcome is increase in the. So what basically is happening, the kiln will start producing more volume. So while pumping the same amount of fuel. So when you have more volume out of the same kiln, obviously per ton your fuel consumption has gone down. So that's the entire idea behind this project. But you got it right. That's the way it's going to be.
Sorry, because if I look at it, say, I'm seeing that if we expand to around 1 million ton cement production capacity by all the bottlenecking, etc., and even at a 60% utilization and 800 rupees per ton, we might be able to do a 40-50 crore of EBITDA from cement business itself, which is where you are planning. And for that you are saying that incremental cost is more for around 7 lakh ton. We'll have to invest around $28-30 per ton.
Correct.
So that would be, so if I try to get that absolute cost, then
the project cost is around 121 crores now, which is coming out around $26.
121 crore.
Yes.
Okay. And right now, how much cash we have on books, and what is the debt?
Debt is compared to last year. I think so. The outside debt has reduced to around from 199 to 169 crores now.
So to 169 crore, right? And how much cash we have? Because I think 121 crore is our total capital expenditure over next 1 year. Maybe around 20 crore is what we meet from our EBITDA. But balance 100 crore we'll have to raise additional debt.
Yes. Now we are negotiating with the bank and investors. We are looking at a couple of options. One could be the promoters have internal funds which we will invest to the extent what is required to be infused into the system, and the balance is going to be from the bank. So it is going to be maybe like 40-80 or 50-70 or a 30-90 split. Now that will depend on the further negotiations with the bank and closing the finance part of it.
Okay, so you are saying that it is going to 70-80% of this incremental 100 crore. Please correct me if the number is wrong, because I think 20 crore would be internal cash flows. So I am assuming that 100 crore is the additional fund requirement to bridge the gap. Of that, 80% is going to come from promoters itself.
No. Out of the remaining, okay, even if you say we have 20 crores cash accruals now, so when I do a project of, let's say the project cost is 120 crores for the round figure.
Right.
So I will have to, as per the bank guidelines, I have to bring minimum about 35 crores or so. So apart from that, 35 crores can come from internal accruals plus additional equity or the promoter loan. It doesn't matter. But the bank will only fund the remaining part.
Got it. So bank will fund the remaining part. Around 30-35 crore is what our internal accruals and everything should.
Plus promoter loan, or we could go for some private equity or some placement. So there will be some mechanism which we have not finalized yet, which will come into the play, and based on those, we will go to the bank and get the sanction.
Got it. Sure, sir. Thanks a lot. I think mostly from my side. Thank you.
Sure.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. The next question is from the line of Siddharth Aluwalia, an individual investor. Please go ahead. Siddharth, your line is unmuted. Please go ahead.
Hello.
Yes, Siddharth, please go ahead.
Yeah, my question is, how demand shaping up in the area of your presence?
The monsoon was pretty moderate. I wouldn't say it was very encouraging, but the October has given a good change. So there is a definitely on a very positive increase compared to a similar quarter in the previous year.
Okay, and what is the outlook for H2?
What is what?
Outlook for H2.
Okay, for some reason there was some disconnection in the voice. Did you say a bit?
My question is, how you are seeing the demand for H2?
Oh, H2, yes. H2, like I said, there is already an increase in the pull of the cement. Since October, we are seeing the cement demand has gone up. The prices have gone up. This November, we expect the prices to go up further. So demand has been very firming up very well. Outlook is very bright, which is very typical for Q3. And Q4 is the top class because in Q4, typically the prices are the highest, the volumes are the highest. We are seeing the demand go up, which is pretty much expected due to this cyclical nature of the business.
Okay. how we are seeing the distributors and sellers?
No, we are selling it through distributors and, if it is a small zone, maybe retail outlets. We don't have our own retail outlets. We sell it to either distributors or agents or directly to the infrastructure developers, like the builders.
Okay.
But we have a network of dealers, basically.
Any government approval?
Yes, we have
that
plenty
you
of
are
support
supplied?
from many government departments like irrigation, the road, the National Highway Authority. So there are a lot of the same gardening, but again, due to the small size, due to pricing considerations, we are focusing more on the rural market right now, where we are getting the highest realization. But yes, we do have have already opened up in the government sectors. In the time to come, we will start working towards with them. In fact, this month we started supplying to one major RMC firm who has contracted us to sell the supply for entire 3 months.
Okay, and have you expanded more in South Maharashtra?
Not significantly. So we are more focusing on the South Maharashtra, whatever market we have, we're continuing to do that, particularly in Ichalkaranji, Kolhapur regions. Otherwise, our focus has been our tier 1 target area, which is within 200 kilometers, like Belgaum, Hubli, Dharwad, Gadag, or Karwar or some of that sort.
Okay. Thank you.
Sure. Thank you, Siddharthji.
Thank you. The next question is from the line of Sachin Shetty, an individual investor. Please go ahead.
Hi sir, Sachin Shetty here. Sir, from your Concall, I come to know that the capacity expansion, the construction activity, we are starting from the Q4, say for example January, February month, and it will completed by next 1 year, say for the FY24 to 25.
By March 2024 is what is targeted.
Yeah, and a feasibility study we are starting from last 6 months. So for this, we have ordered any equipment for this? Yeah, we have to start the process.
See, the basic work, I would say, what is civil foundation work, we have kind of started for some small areas, which does not take a lot of time. We are awaiting the final RFQ from our technical consultants. Once we have an RFQ, we will be giving it to all the potential suppliers who will be giving us the quotations within 3 to 4 weeks. So once we get that, the next step would be placing the orders, and we could build the civil. The major part of the civil work to start in Q4. That's the direction what we are going right now.
Okay. Then from Q4 to next Q4, the process will start. So, sir, the question is for the debt repayment. Yeah. For the debt repayments, whatever the debt is outstanding now, 180 CR or something. So, we have planned any to repay that debt, some amount like 20-30%, to go ahead for the next capacity expansion for this 125 capex amount?
No, we would not pay the debt ahead of time because that will unnecessarily utilize our cash flow. So whatever cash flow we are generating, we will focus more on implementing the moderation as soon as we can. So debt will continue to keep coming down based on the current repayment schedule given by the banks. I think around 20 crores a year, debt will keep coming down. So that is what is likely to be continuing with.
Okay.
So we will not pay ahead of time. At least the strategy is there not to pay ahead of time, at least for the next year, till our expansion is complete. So once we have sufficient EBITDA, if there is sufficient cash balance generated, then of course that is going to be the next line of thought.
So can I assume that our existing debt is 180 CR and fresh capex of 120, so almost 300 CR is the debt will come on books?
No. That may not be factually correct. Typically, when we talk about debt, it has to be outside debt because promoter's debt will remain in the company till the entire debt is repaid. So it's like a quasi-equity by itself. Even the interest will not be drawn generally, so which will remain in the company. So our outside debt has come down significantly now. I would say by September 30th, 2022, our outside debt was only 156 crores. This is only from the banks. This is including the additional 40 crore loan what we have taken for 12 megawatt. Our sanctioned debt was around
180 CR debt is not a 150 CR is there, right?
156 crores is an outside debt, excluding working capital, but including all the term loans.
Okay.
So what you see in the audited results or the limited review results is including the debt from the promoters, which is like a quasi-equity, because in the requirements it is shown as a long-term debt. However, that debt has to be treated as a quasi-equity. The only repayable debt is by September 30th around 156.9 crores.
Okay, and this additional 120 CR debt, what we will be utilizing for capex, it will come from.
No, we will not be expecting a debt of another 120 crores. Outside from bank, right now the way we are discussing, between 70 to 75 crores is expected outside debt, additional outside debt. But by the time, let's say right now it is 156 plus around 70, so you're talking about a debt of around 226 crores.
226 crores
total by around say 50%, but of course your capacity will increase by 3 times, EBITDA will increase by 3 times. That is what we are looking into this optimization plan.
So out of this 120 CR debt for the capex, you told me just now you told me that 156 will become from the outside debt, and what would be the remaining? Say,
remaining is the promoter loan.
Promoter loan, and that will come to the books after 1 year or 2 year, whatever, right?
No. I was talking to you about current. What is happening is when you look at our limited review results or the balance sheet, you will see the debt figure higher than 156 crore what I'm mentioning. That is because promoter loan is part of the debt.
Okay.
So promoter loan by itself is not we would not consider it as an outside liability because it is not repayable, or promoters will continue to keep it unless the outside debt is controlled. So typically the company has an outside debt of only 156.9 crores as on September 30th.
Understood, sir. Understood. So my last question is, just now you told that our solar EBITDA is 7 CR for the Q2 and cement is 1.5 CR.
Yes.
So can I assume that solar is more profitable business than cement?
Definitely yes, without any doubt. That is what is happening. So we could not fix the cement problem earlier because of size and the cash flow issues. But now solar giving that kind of additional cash flow and the muscle, now we are going for the jugular vein of cement. The cement, what we are generating EBITDA per metric ton 300 is too less compared to around 1400 to 1500 what major plants are achieving. And it is not a difficult thing to achieve. What we will do now is what was done by the major plants about 10-15 years back. So the technology is going to be same. In fact, we are entering at a mature technology which is already established. Plus, we are going in for alternative fuels, which will be something a little newer compared to our existing large cement plants across India.
Okay. So last quarter, quarter one, we have paid a deferred tax liability of 22 CR, right? So
Correct.
That for the solar depreciation, we got that 22 CR. That
Correct.
means what? The tax provision is not required for the next whatever the tax liability is there. So then why we paid tax this quarter, sir?
Okay, what we are paying this quarter is a MAT actually. We since due to high depreciation for solar industry given by the government of India, we have a huge income tax depreciation loss carry forward, which is around 90 crores. So actual income tax we would still not pay in next 4 to 5 years till the expansion is. Once the expansion is done, maybe we can utilize it. So what you see on the books is the MAT actually.
It's a MAT of 90 lakhs. Okay, that will be continued.
That will be refundable, yes, adjusted against future taxes.
Okay, sir. Thank you, and I wish you all the best.
Sure, Sachinji. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Sandeep Mane, an individual investor. Please go ahead.
Hi. Hello. Good morning.
Morning.
Good morning. Sir, my question is, in Q2 FY23, margins were about 36%. Correct?
Yes.
Yeah, sir. Is it the highest ever achieved by the company?
EBITDA, come again?
Yeah, EBITDA margin. Yeah.
Yes, EBITDA. See, EBITDA margin, most of it is contributed by solar. But yes, that is the EBITDA margin on the books.
Okay. Is it sustainable?
Of course, yes. We have solar to back it up, which no one can take it away from us. In fact, when we set up a solar plant in 2018, the cost of production was around 4 rupees because of interest and O&M cost. Today, the cost of production is less than 2.5 rupees, and that will continue to keep going down. So I'm pretty certain that EBITDA margin, only because we have a solar plant, we will not only continue, we expect to improvise further.
Okay, sir. Sir, one more question. Have you started any meeting for fundraising for expansion?
Yes, we are discussing possibilities with few investors, but nothing has come to a point where I could, discuss it or give it out in open as of now. But yes, discussions are definitely going on.
Okay. Thank you, sir.
Thank you, Sandeep ji.
Thank you. The next question is from the line of Aditya Kasera, an individual investor. Please go ahead.
Hello, am I audible?
Yes, Aditya ji, go ahead.
Sir, I just wanted to ask two questions. Firstly, once the additional capacity or through the modernization process comes online, will we able to sell the excess solar power generated? Because currently we are having a capacity of 3.6 lakhs per tons per annum, and we are using 12 megawatt of our solar capacity for captive consumption. So if we are going to increase it to 1 million tons per annum, so are we going to use the remaining capacity for captive consumption or what?
Yes, Aditya ji, you're right. Once we consume everything captively, we would not be selling solar outside. So solar EBITDA is arrived on the basis of the opportunity cost, based on what price we are selling. Yes, we will not, and that is our intent, to eventually utilize the entire power for ourselves.
Okay, sir. And the next question is, sir, we will start our modernization operations or in next year, Jan or Feb. So during this modernization period, is the plant going to be operational, or for some period during the modernization period we won't be producing any cement?
No. Plant will be 100% operational, because plant we will be working on two major aspects. One is adding a grinding unit, which is independent of existing grinding unit. It's a new facility, entire new machinery, the new space of the plant. So while that has been adding up, till it is commissioned, we don't have to switch off the old grinding unit at all. Regarding the heat optimization task what we have taken, which is done by adding one new preheater, the building and preheater heaters along with the inline calciner. Even while that is being set up, it is in a space next to our existing kiln only. So till it is built up, come to a point where the kiln will continue to operate. Only during the interconnection period, once we build a new preheater tower, so to take the raw material through that instead of the old system, that time we expect about maybe 20 to 25 days shutdown. But that is insignificant, because we would have sufficient stocks at that time not to, it won't hamper our sales in any manner.
Okay, sir. Just once our capacity increases, are you looking to set up a heat recovery system and utilize that power and sell it in the market, or use it for our captive consumption? Any plans right now?
So did you ask me if I could purchase the power from outside and continue to sell my existing power?
No. So So there's the heat recovery process where waste heat is used to generate power. So is there any plan once our capacity increases to use that power either for captive consumption or to sell in the
Okay. So okay, I know for some reason I have a little patchy, but did you ask me regarding the waste heat recovery?
Yes.
Okay. So waste heat recovery is also a possibility, but we have not included in this project as of now. Of course, it is going to be an important aspect. The way we are looking at it right now is cutting down. We are going for a six-stage string connection preheater cyclones. Plus, most of the heat what will come out, we want to utilize it to heat up the coal and pass it through the raw mill and cement mills. So that is our first. With that, what is going to happen is the tons per hour or the production capacity of the cement mill and raw mill is expected to improve. Once that improves, we can go for higher, consumption. So waste heat recovery for now, we're not focusing on. Why other plants have done that is because they don't have solar power. What they have is the coal-based power generation units. So for them, it would make sense because that particular equipment, they can utilize it, the kiln is stopped. For us, since we already have a solar power, we want to focus more on the operational efficiency. So that's the reason we have not taken up in this project. But yes, we will always keep that in mind and see if that can be implemented in future.
Okay, sir. That's it from my side. Thanks a lot, sir.
Thank you, Aditya ji.
Thank you. The next question is from the line of Siddharth Aluwalia, an individual investor. Please go ahead.
Oh, yeah. Just few follow-up questions for solar.
Sure.
Yeah, sir. What was the average solar price for the quarter?
Okay, I can give that accurately to you. My average price this quarter was 6.92 rupees. The previous quarter was 6.66 rupees. And the previous year was, FY22 was 6.28 rupees. So as you can, in fact, last month I sold it at an average price of 7 rupees. Like what I mentioned in my Concall, due to fuel escalation going very high, discoms are charging additionally up to 1 rupee on their electricity bills, because of which we are able to increase our cost further. But the question to answer the answer to your question is 6.92 rupees last quarter.
Okay, so how much capacity was used for internal consumption?
Internal consumption, okay, that also can give an accurate information. For quarter, we generated around 1.12 crore units of electricity for quarter 2, and the captive consumption was around 46 lakh units.
Okay, any further capex plan in solar in near future?
No, once we have a capex, the entire power is expected to be used captively only. We will not be able to sell it outside, or maybe some small percentage, maybe less than 5% of our generation, we will be able to sell it outside.
Okay, after that, what is the maximum turnover we can achieve?
Come again?
After capex, what is the maximum turnover we can achieve?
After capex, is it? Okay. If we run at 80-85% capacity, we are targeting around, gross sales of around maybe 550 crores. The net sales around 450 crores or so.
Okay, and is cement capex will improve margin further?
Absolutely. The whole project is based on the strategy that once we do fuel and power efficiency, the margins are going to improve drastically on cement itself. Together, again, our EBITDA is going to be higher than what we are doing right now. Or EBITDA margins, I meant to say.
Okay, and what will be the per kg EBITDA?
Percentage you're asking me?
Yeah.
No, my CMA data shows it is going well above 40 to 43%. But I would not like to stick to that figure because 2 years down the line, I don't know what is going to be the power cost, or I don't know what is going to be the fuel cost. But if we freeze on the existing, assuming the power, nothing changes in the next couple of years, and we are actually going for up to 80% this thing, my EBITDA, I'm expecting around 120 crores on around, about 400 crore sales. 110, not 120 crores, over 120 crores.
Okay. Hello?
Yeah, okay. You can hear me, right?
Yeah, I got it.
Mr. Aluwali, are you done with the question?
Yeah. Thank you.
Thank you.
Yeah, thank you.
A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to Ms. Supriya Madhye for her closing comments.
Thank you everyone for being on part of the call. If you have any more questions, please feel free to write me at supriya@kiranadvisors.com. Thank you once again. Thank you, management. Thank you so much. We can conclude it.
Yeah, thank you all. Bye-bye.
Thank you, ladies and gentlemen. On behalf of Kiran Advisors Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.